Well, I think we'll get started. It's 7 o'clock, and I don't want to take too much of your time this evening. For those that haven't met me, I'm Jonathan Tucker. Nice to meet you. Thanks for making time. I hope that you'll find tonight's presentation informative and practical. As you have questions, I'd be happy to entertain them. If I could ask, just so that we can get through the materials, I'll start and move through my materials, and then as you have questions, if you could save them until the end, that would be great. And I see everybody's on mute, which is good just for background noise. If you're more comfortable in terms of asking questions, there's also the chat function. If you'd rather send your questions through chat, feel free to do so. A little bit about me. I'm a chartered accountant and chartered professional accountant. And our practice deals primarily with healthcare professionals. Our biggest section of our practice is with physicians. So we know this space well. And we work with physicians and residents and fellows across the province. So that's our backyard. So that's enough about me. But as you have questions, there'll be contact information at the end as well. I'm just going to move us through our presentation. Tonight, what we'll be covering is how should I be tracking my expenses? Do I need to keep receipts? If so, for how long? What qualifies as an expense? What's the difference between a tax credit and a deduction? How can I use tax credits to adjust the income tax withheld from my paychecks? What qualifies for a tuition? What qualifies as a tuition credit? Should I hold off on claiming them? How much should I set aside for tax this year? And what are the tax implications of receiving government assistance through COVID-19 programs? What happens if I get audited? Which tax forms do I need to complete as soon as possible before the end of the year? Now, so that's what we'll cover this evening. And quickly. Now, I want to start out by talking about, let me first of all just let you know about this piece as I move through our slide deck. This is a topic I want to address because oftentimes it's taken for granted that you'll know what you should expect of an accountant and what an accountant will expect of you. So when I work with clients, I say to people, you should feel comfortable with the people that you're dealing with. Can you see yourself working with that individual in the future? Are you comfortable asking questions? Oftentimes I find people are concerned that they appear ill-informed or stupid. They're afraid of asking a stupid question. There is no such a thing as a stupid question. You've not been trained in this. Your experience is very, very minimal. Your ability to know what to do is low, and that's why you come to see somebody. But you should feel comfortable with the person that you work with. Do they explain things to you well? Now, some of my clients, they want to know in infinite detail how something works, and others, they just want me to cut to the chase. But you should feel like you've got a good handle on your circumstances, and that you can ask a question in a complex instance like tax can be explained in a way that you can understand it. And if you don't understand it, you should feel comfortable saying, hold on a second, go back, explain that to me one more time. So that's really key to your relationship with somebody that you work, whether it's an accountant or a lawyer or whoever. What else do they offer you? I spend a fair amount of time with clients up front explaining to them how their systems should work. What do you need to keep? What do you keep track of expenses? Rather than jumping right into tax. So often many of my colleagues, and they are competent in what they do, but we make assumptions that those we're working with will have a knowledge base that they don't have. And so I'm always saying to people, I need you to do it this way. Why? Because that's the system that we've designed to make sure that we capture all of the expenses, catch things that you might not catch. So the second thing you should expect of your accountant is not only are they good teachers, they're Secondly, you feel comfortable with working with them, but they provide you with a system to work. I'm here to serve you. You're not here to serve me. And so I want to make sure people are comfortable, they know what's expected of them, so that when you sit down to do your tasks, your monthly bookkeeping tasks, you know what you should do and how long roughly it should take for you to do it. So I just wanted to start out with that, just to say, you know, here's some of the things that you should expect of the accountant that you work with. Now, with that said, what should your accountant expect of you? Well, I wouldn't expect that you would know what I know, just in the same way that you know I wouldn't know what you know. I'm not going to explain to you things that have taken years of study, in the sense that I'm trying to bring you up to speed on that, in the same way that you would with a patient. You wouldn't, if I were your patient, you wouldn't sit me down and say, okay, now I need you to start out by reading this book on anatomy. And when you're done, then I need you to read this book. In the same way that I wouldn't sit down and try to explain to you complex tax things. So I'm going to keep my instruction to you very practical as we work together, so that you know what needs to be done. But I think it's fair to say that once that's done, and once you've had the chance to ask questions about how this works or that, but then you do that. And so that may sound pretty basic, but it's really important that you follow the instructions that your accountant gives you. And your accountant should explain to you why you're doing it this way. So that's a little bit of background, and I find that's an important conversation to have, so that it creates for you some expectations and some boundaries in terms of what you should expect in an accountant that you work with. All right. Now, I'm going to move on. How should I be tracking my expenses? And do I need to keep receipts? I spend a lot of time with people on this because, again, you've not had any training. As you're doing your residency, you will have had expenses in the past that nobody has told you to keep track of. And they won't have told you to keep track of receipts. So let me be really practical. Let me show you what I do. This is how I keep track of my receipts. I keep all of my receipts. This is this month's receipts. So I don't sift through them and say that one I won't need, and this one I will, I better keep that one. I keep them all. Sometimes you have to return things. You need your receipts to return them. So I'm in the habit of keeping everything. And for a month, when once my credit card statement comes in, I take these. I don't sort them. I don't put them in order. I will check my credit card statement to make sure that I'm in agreement with what's been charged. But once I do that, I take these and I put these into an envelope. On the front of the envelope, I've written the credit card, and I just used one credit card. And I've written the month, December 2020, and underneath that I write 7, and then I add the 2, and that comes to 27. Why do I do that? That tells me the year that I can throw this envelope away. You need to keep your receipts for 6 years. I put down an extra year just to be safe. So I can throw this envelope away in December 2027. That's the first thing. Do you need to keep receipts, and why? When you get audited, and notice I said when, not if, you will get audited. CRA will expect that you provide them with proof. This is the proof. They won't accept your credit card statements. That doesn't count for anything. They want to see the actual receipts themselves. So get in the habit of doing this on a monthly basis. Put these envelopes in a dark place. Why? Because these things fade. And if you can't read the receipts, they don't count. If you can't provide CRA with a receipt that's legible, they will not accept your claim for an expense. So really important that you get into that habit and just find a system that works. And this is the system I suggest to all of our clients. Get in the habit. I don't want these envelopes. These are for you to keep to substantiate your claims for expenses, as well as to have receipts that you can use if you have to return things. But from a tax audit perspective, this is what you need. Now, that's about how to keep good documentation. And as I say, you need to keep that for 6 years. So I've said to you, save your receipts. And some of you will say, well, can I use electronic? Like, can I scan my receipts? Absolutely, not a problem. CRA will accept hard copies or soft copies, so that's not a problem. And we talked about how long that is. Now, the other thing, some of you will have 3 or 4 or 5 credit cards. My suggestion is that you have one. Here's mine. One for both business and personal. So it's not like you're going to have 2 credit cards, one for business and one for personal. Why not? Well, with all due respect, at this stage of your knowledge, you won't probably recognize all your business expenses from your personal expenses. Now, over time, you'll become more used to that. But if you have one business statement and one personal credit card statement, and you have that for a year, so you now have 24 statements instead of 12, and you summarize your expenses based on what goes on that business statement, then I'm assuming you've given me everything. However, you don't know what I know. You won't know expenses that I would recognize as an expense. And so I say to people, use one credit card, put all your charges on that where possible, avoid using cash. Why? Because if you get a receipt and you lose a receipt, there's no way you're going to be able to retrieve that receipt in the future. Use a credit card. This becomes your basis for bookkeeping. This is my system. So what I'm telling you is what I do. And the reason I say put everything on one is because then what you're going to do on a monthly basis, besides putting your receipts into an envelope like I've talked about here, you're now going to log into your credit card website and you're going to download the data of all of your transactions into an expense tracking worksheet. And I'm happy to share that with you, but that is a worksheet that will capture all of the expenses, whether it's personal or business. Why do we do that? So I can see everything, or my staff can see everything, because again, there may be things that you don't count as expenses that are. And if you filter those, if you delete some of those transactions because you believe they're not business, we won't see those. So my role here is to try to create a system for you that will ensure that I can see where money is being spent and on what and for what reason. So where possible, use one credit card. When you download, rather than creating a worksheet, and just let me explain why I suggest that you download. I see people that spend hours creating these worksheets that summarize their expenses. They're putting in information that's already being captured by the credit card company. And so there's no point in duplicating work. You can just simply download those into CSV files or Excel files, and there's all the transactions for a month. All you have to do then is go through that and allocate those expenses into the columns that you'll see on the right on our expense tracking worksheet. So that's your system. Should take about 20 minutes a month, 20 to 30 minutes a month, but no more. If you're spending more time than that, you're spending too much time. Don't fall behind. Why? Because when you're looking at that Amazon charge on your credit card statement 3 months later, you won't remember what that's for. So while it's fresh in mind, then I suggest do this on a monthly basis and just get in the habit and do 20 to 30 minutes a month, stay on top of it. And each month you're going to add the data from that month onto that worksheet. By the end of the year, you will have 12 months of all of your purchases onto one Excel spreadsheet. And that's your system for keeping track of expenses. All right, that's about that topic. What qualifies as an expense? This may seem like a basic question. There, and you can see on screen here, I've given you some examples. Let me go back. I went too fast. I've given you some examples of expenses, but I want to give you a concept. I want to give you a concept because if I just say, here are the things that you can claim, you will only know to look for those things. So I want you to think about it this way. If you're spending money and it has anything to do with earning your income, that represents an expense, okay? And that we want to track. Now, I did not say that you could claim that expense. Some expenses can't be claimed, but I want you thinking about when I bought that reflex hammer, I didn't do that just for fun. When I bought that stethoscope, it wasn't because I just did that for fun. No, why? You needed that to earn your income, whether it's now or in the future. That's an expense. When you take a colleague out for dinner and you talk about a patient or something you're working through and you pick up the tab, you're spending money in the course of earning your income. You see that principle? So I'll come back to that throughout this presentation just to reinforce that. But if you can grasp that, the next time you go on a trip somewhere that may have both a personal component like a vacation, but you also meet up with a colleague from medical school or something like that, remember, some of the expenses that you're incurring on that trip are connected with earning your income. Now, my job is to tell you whether or not you can claim those. Your job is to keep track of those. And that's, again, why we come back to that credit card and that expense tracking worksheet where everything goes on that worksheet. So if you're not sure about something on that worksheet, you highlight it. I don't know. You know what? I met this person while I was in London, England. We'd gone to medical school together. Can I write off my airfare? So that's the type of thing I want you thinking about. I don't want you to deciding whether or not you can claim it. I just want you capturing it. I just want you thinking about it so that we can talk about it when we look through your spreadsheet. Remember, I get the spreadsheet, you keep the receipts, okay? Just so you're aware of that. All right, now, here are some of the expenses which are broken down. And by the way, as medical residents, you have at least two streams of income. You have employment income, that's the income that you get from working at your hospital as a resident. And then you've also got a stream of self-employed expenses at this point. So you have two filing positions. You have employment income, and you can claim the expenses like the ones that are on screen with respect to employment expenses. And then you've also got these expenses that you're sinking in or investing into your medical practice. So once you get your independent medical license, then you start to claim those expenses in the future. So remember, is there a connection between incurring the expense and earning your income? Doesn't matter how remote that might seem, keep track of that. We may be able to claim that. All right, one of the biggest expenses that you can claim as a physician, because many of you don't have a lot of expenses once you get into practice, but if you're new to practice, maybe one of the biggest expenses you might have is office overhead, where you pay a percentage of your billings to the office that you're working out of if you're in a clinic setting. But then another of the expenses, of the relatively few in comparison to other businesses, expenses that can be claimed are motor vehicle expenses. And so in order to do that, and I'll show you on this slide, I keep going too fast on my slide. Let me go back for a moment here to the previous screen. All right. In order for us to claim vehicle expenses, we have to recognize that there is both a business and a personal component to the use of our vehicle. If you use your car for work related, there are trips that can be claimed. And once you do that, then it means that it opens up a whole list of expenses for vehicles that can be claimed. But we have to make sure, firstly, that you have a system for keeping track of the kilometers that you drive, the kilometers that you put on your vehicle, so that we can distinguish the personal from the business. Because based on pro rata share of your kilometers represents the amount of the expenses that can be claimed. So if you drive 12,000 kilometers a year and 6,000 of those kilometers are work related, then you can claim 50% of your expenses. What are those expenses? Well, there's fuel, there's repairs and maintenance, there's license and registration fees, there's parking, there's insurance, there's a portion of the purchase price of the car, or if it's leased, you can claim lease costs, parking, 407 ETR. That's a list. You can't claim parking tickets, you can't claim speeding tickets. You're not allowed to claim fines as an expense, but those other items are the items that can be claimed. You can even, if you're driving a zero emission vehicle, a ZEV, you can even claim a portion of your utility bill at home, because that represents the fuel needed to operate the car in the same way that a gas operated vehicle operates. So those are some of the expenses with respect to operating a vehicle. I had on that slide about what people oftentimes ask is, well, are my trips to and from the hospital deductible or not? I'm going to say it depends. As a resident, typically no, unless you're on a home call and you get called into the office or into the hospital. If that's the case, then those kilometers can count. Or if you move from one facility to another during the course of the day, then those trips can count. If you go to a conference, or if you go to a course, or if you go to the bank, those trips are practice-related expenses that can be claimed. But in your situation, I want to be careful, because as an employee, your trips are relatively small. As a self-employed, a healthcare practitioner, somebody who's started into practice, who's new to practice, that opens up considerably. And so if you're in that category, we should probably talk about that, because you may be able to claim a good portion of those expenses. Can I claim a percentage of rent if I'm working at home due to COVID-19? Well, if you recall a couple of slides ago, it doesn't matter whether it's COVID-19 or not. If you're an employee and if your employer says that you're required to have to work out of your house, then you can claim a percentage of your home expenses as an expense against your income. I point out specifically with respect to COVID-19 that CRA has just 2 days ago announced a simplified method for claiming this, recognizing so many people have had to work from home as a result of the pandemic. So certainly certainly a claim can be made for that, and details will be coming out in our next advisory with respect to the specifics of that program. That'll be early next week. So if you're interested in that, drop me an email. I'll make sure you get it. So here are some of the items, and again, I point out the fact that, like the vehicle, the home expense is a prorated expense. If you have an 800 square foot apartment and 100 square feet of that is your workspace, your desk where you do your work from, then you can claim 1/8 of your expenses against your income. So, and in particular, as I mentioned here, there are special COVID-19 concessions about that. Now, one of the questions that I get asked a lot is around the use of tax credits. And I couch that in the context of the difference between a tax credit and a deduction. I think the reason people, well, I don't think, I know the reason people ask this is because they think that a tax credit may be worth more to them in the future than it is today. And so what I want to do is explain the difference between a deduction and a tax credit, just to demystify this. A tax credit, an example of that would be your tuition tax credit. That's your largest tax credit that you would typically have. And as I use with respect to a tax credit, I tell people, think about a tax credit like it's a Tim Hortons gift card. It's worth $20. It's worth $20 to me, just in the same way as if I gave it to you, it would be worth $20. Tax credits are like a gift card. They don't change in value based on your income. Expenses or deductions do. So what I mean by that is, on this slide, this is a slide to show you how tax behaves. You'll see on the on this axis, this is the rate of tax that you pay. And over here, this is your income. Now, if you're a resident, you're spending, your income is in the $65,000 to $70,000 range, and you can see where the tax rate intersects on that line. It's quite low, right? Well, if you're about to go into practice or you've just gone into practice, then your tax rate is going to go significantly higher based on the amount of income you're earning. Why do I tell you that? Well, I tell you that because with respect to deductions, there is planning that goes into deductions. There isn't with tax credits. So the more you make, the more you pay when it comes to income tax. And the higher the value of deduction is when your tax rate increases. Right now, your tax rate is low, the value of a deduction is low. Whereas if you go into practice next year, the value of that deduction will increase significantly. Let me be concrete. If you make an RRSP contribution this year and your income is $70,000, and next year when you enter into practice, when you get your independent medical license, it goes up to $250,000, you would be well advised not to deduct that contribution this year and wait to claim it next year. Why? Because this year your tax rate is probably on an average basis between 12 and 15%, and next year when you earn over $214,000 under current tax rates, your tax rate will be 53.53%. That means for every dollar that you can reduce that, you're saving 53 cents versus 15 to 20 cents. That's the planning around deductions. All right, I see my time is getting away from me. I'm going to skip past this because we've talked about this. There's really nothing to defer with respect to claiming tax credits. Now, This is a question that you wouldn't necessarily expect to be asked. Why? Because as medical residents, you never really have to worry about how much tax you need to set aside. It's taken off of your paycheck. Each time you get a paycheck, income tax is withheld. And so you don't really think about that, except this year, or except if you find yourself moonlighting. And that's one of the examples that I've talked about in here. If you're moonlighting, then you may, the income you're earning from moonlighting is not subject to tax withheld at source by your employer. You're responsible for that. So the reason I raise this is if you are moonlighting and you're earning self-employed income, or if you were off and collecting CERB because for some reason you couldn't work, either you were diagnosed or you're on quarantine and you qualified for that, that's an example of income that was not subject to tax. And so you should expect to pay some tax next April when you file your tax return based on that income. How much? Well, it's hard to say, but if your income falls under $95,000, I would say to people, set 25 to 30% aside for tax. So that's just a rough rule of thumb. So I say that because I've mentioned in here, if you have other sources of income as well, then, or if you're new to practice, then I wouldn't just go by that 25 to 30%. I would actually opt to do a tax calculation so that you have in mind what you're going to pay next April. Right now, this time of year, we're doing a lot of tax calculations for people just to say, all right, you're going to need to dip into your line of credit next April to the tune of this amount. So make sure there's no surprises coming. All right. I've just talked about the implications with respect to CERB, that they're taxable. And now, this topic, I'm mindful that we're at 7:26, so I'm going to quickly cover this, only to say that when you get contacted with respect to an inquiry about your tax filing, beware, it could be a scam. So don't rush to respond to a phone call that says, we're trying to get in touch with you with respect to your tax return. We'd like your social insurance number. Most people are attuned to this, but there are some very sophisticated scams out there. So what I say to people is, if you've been contacted by phone, and CRA does contact people by the phone, it isn't just scam artists that do this, I would politely say to CRA, listen, I don't know you from Adam. I don't know if you're really with CRA or if this is a scam, so I'm not going to answer any of your questions. But what I will do is I will call the 1-800 line, and I'll ask if you're trying to contact me, if CRA is trying to contact me. If that's the case, then I would go ahead and treat that as a legitimate call. What would I do next? I wouldn't necessarily talk to them. I would be inclined to be polite and say, listen, I'm a physician. I don't know anything about this stuff. That's why I have an accountant. Could I have you talk to him? And let your accountant deal with that. They will ask you, CRA will ask you questions that you won't understand the significance of. I'm going to switch gears here for a moment, because part of what we were talking about this evening was things that you can do before the end of the year to keep your tax under control. And if you're a medical resident, this is a form that you will want to be aware of. And it's called a T1213 form. Actually, I'm going to move to the next slide first. And this one is called a TD1 form. And this is the form that most people are familiar with, that their employer gives them to fill out their tax credits. And there is so much confusion about this form. But the reason for the confusion is people will come across question number 5 on here, which is just about here. And it's asking about tuition tax credits. And so people will oftentimes carry forward a large balance from their tuition tax credits from prior years in medical school. And so this line asks people to fill in the amount of their tuition tax credits. But most people don't read this form very carefully, and they think that they should put in $100,000 here if that's the amount of the tuition tax credits that they're carrying forward. And incidentally, if you're not sure of how much you have on record with CRA, each year you file your tax return, CRA will provide you with a notice of assessment. It's a 3 or 4 page document, and it summarizes what they have taken from your tax return. And at the end of that, page 3 or page 4, there's a notes section. And it's there that they explain certain things. It's usually in language that's incomprehensible to a layperson. but nonetheless it's there. But if you have tuition credits, you will find them described in that section in the narrative there, and it will let you know what they're showing. Oftentimes we find people have not claimed all of their tax credits on their tax return, and so they might show 30 or 40,000, and I'll say to them, well, but you just told me you were at Trinity in Ireland, and you must have spent a lot of money on tuition. How come you've only got 30 or $40,000? Have you reported all of that on your tax returns in the past? And oftentimes we'll end up amending returns to capture tax returns that haven't been reported. But I mention this form because this form is particularly important, so that you tell your employer, please don't take off too much tax. You want to fill this form out, and you want to answer question 5 by estimating the amount of money you're going to spend on tuition this year, 2021, because they will reduce the amount of income tax based on the response that you give there. But the mistake that's oftentimes made by people filling this in is they think that they're supposed to put the full amount of their carry forward from their notice of assessment, the $130,000 of tuition. That's not what this form is for. You would put that number on this form. This is called a T1213 form, and this is where we send this into CRA and ask permission for CRA to write a letter to the employer saying, don't take any income tax off at source. This is filed by year, so you want to make sure as we're starting a new year, you get this into CRA if you're in those circumstances. I will say this, we fill out an awful lot of these forms for clients. They're confused by them. They just want it taken care of, and we say, okay, fine, send it to us. We'll get it and submit it to CRA. You'll see it first before we submit it, but that's just a service that we do for people. They're confused by these forms. All right, now, this form is one that you should expect early in 2021. And it's this form that tells CRA what your employer has agreed that you can claim as an expense. And it will be in this section right here that you will see that your employer will fill in the expenses that can be claimed, just in here. And they will put down their CPSO, CMPA, those types of expenses, the parking, travel, those would be the expenses that your employer, the hospital, would say that you can claim. Basically, that form needs to be provided to CRA in an audit situation. So if you're claiming expenses on your personal tax return and you don't have that form and you get audited, CRA will throw out those expenses. They need this form because this is the form of your employer saying, we agree, this is part of the terms and conditions of the employee. They're required to spend money on a cell phone. They should be able to write it up. You need to make sure you have this form. All right, now that's covered my materials. Do you have any questions? And this is the part where Anthony is going to be my eyes and ears. So if you have questions, feel free either through chat, or if you want, you can ask just by unmuting your phone. Have I provoked any questions that you would like answers to?
Hey, Jonathan. Thanks for the talk.
No problem.
With this last form that you were talking about,
Yeah.
so should if I'm a resident, should we just print it off and like send it to our employer and have them fill that out every year?
Ben, that is a great question. No, you don't print that off. Your employer prepares this for you. They sign it, and they will get it to you. It's usually in your portal. So that's where you would get it, and you would get it in January or February. Thanks for pointing that out. This is not something you can fill out and give to your program director and say, here, sign this. They do these en masse and they make them available for all residents. So what I mean by that is this form will be prepared for you. You may not be aware of it, but this will be filled out for you next month or the month that follows. If you don't have it and you're not sure where to get it, send me an email with the hospital that you're at. We have a list of the program directors that fill these out, and oftentimes we will send an email to that person and copy the client on it and say, we're looking for this T2200 form. Can you please let us know where it is or send us a copy? So great question. Thank you, Ben. That's very helpful.
I see. Thanks so much. That really helps. And then my second quick question is, with this work from home thing, would cell phone expenses, bills be allowed to be expensed?
Okay, another good question. So Ben, it isn't whether it's a COVID related thing or not. You're a physician. You have to have a phone. your employer is going to attest to that. You can't operate without a phone. So it has nothing to do with home expense or anything like that. It has to do with the necessity of a phone to do your job. CRA will allow you to claim that, but you can't claim 100% of that.
Right.
You could make the argument and say, listen, I'm a physician, I need the phone. And I would come back to you if I were CRA and I say, do you ever order a pizza? Do you ever call home? Do you ever call a friend? Like, there is a personal component to that. So if somebody wants to claim 100% or 90% of that, I say, you know what? In tax, pigs get fat and hogs get slaughtered. Don't be crazy, right? Claim a
Yeah.
reasonable amount. What's a reasonable amount? I would say somewhere between 70 to 80% is a reasonable amount. CRA actually has in their administrative policy that you have to count the number of calls that are personal and count, well, who's going to do that? But be reasonable with it. If you're claiming 10%, I think you're being just a little too reasonable. But in there, you're gonna exercise some judgment. Does that help?
That helps. Thanks so much.
No problem. Anything else?
That's it for me.
Folks, I've kept you longer than I promised. I appreciate your patience. I hope this has been helpful. The last topic that I talk about is, it's usually at this point people are thinking, shoot, he's talked about things that I'm sure I've missed in the past. So what does that mean? Can I claim expenses that I've missed in the past? And the answer is yes, you can. There's a form called a T1 adjustment. And we file this more often than not with new clients because there are expenses that have been missed. You've seen there, around 90% of new clients coming in will go back and file a T1 adjustment. And I can tell you where the expenses are that are missed. It's that predictable. So yes, they can be amended, and we do that frequently. Also, just to reiterate the fact that where medical residents or fellows are involved, we will make our services available on a complimentary basis for Canadian tax returns. So any other questions? Thank you for your attention this evening. I hope it's been a good use of your time. We're here. If you have questions in the future, please feel free to reach out. And our next webinar coming up in the following month is making the most effective use of RRSPs. We get a lot of questions on that this time of year. And then in February, you can see that topic as well. Thanks for your time. I'm sorry we've gone over, but I appreciate your patience, and I wish you well over the weekend at this time of year as well. Happy holidays, everyone.
Thanks again for the talk, Jonathan. Bye-bye.
My pleasure. Thank you.
Thanks, Jonathan. Take care.
Thank you, Ben. Thanks, Anthony.
Thank you so much, Jonathan. It was a pleasure doing this with you for the past 4 months.
Thank you, and likewise.
Thank
Have
you
a
so
good
much. Yeah, you
evening.
too.
All right. Bye-bye.